Howdy folks, welcome to Tuesday morning. I'm going to go through the charts very quickly with you. Today we have the CPI data coming out, and tomorrow we have the Fed FOMC interest rate decision. So these are going to be two very volatile days, and particularly today because the inflation rate is what this is all about, the raising interest rates and the economy and so on, everything that we've been seeing going on, primarily due to inflation and the printing of money post the COVID and during the COVID pandemic. This has created an extraordinary level of liquidity in the market up until now, and up until the Fed started raising interest rates. So today's CPI data is really, really important. We'll have to see whether it comes in hotter or not, whether the Fed gets spooked, the market gets spooked. And then tomorrow, the FOMC rate decision, I think that's pretty much baked in at 0% chance of any rate hikes or any rate reductions. So I think it's more about today than tomorrow, but we will be very interested in what Powell has to say post the FOMC interest rates announcement. The market will be super interested after his last stuttering performance to see whether he's hawkish or dovish, and if there's any talk about anything to do with rate cuts or rate hikes. So there's a chance that the market could get spooked by what he says as well, but not by the interest rates announcement. With that backdrop in mind, we should expect some volatility during the rest of this week. And whilst we're talking about volatility, I want to comment on a post that someone made, and it happens quite often, particularly with regards to natural gas. And someone said basically they've lost their entire trading account prior to Christmas on trading natural gas because of my trade ideas and analysis that I put on YouTube. I want to be very clear that any trading decisions you take are your choice and not my choice, and you should never follow anyone's advice on YouTube. You should use the information, if you're going to back up your own trade ideas and your own trading strategy. Please don't hold anyone else accountable for your own trading losses apart from yourself. And of course, you won't be able to follow me on YouTube completely in any case, because I don't post up every single trade on YouTube, and I reserve those for my members in my private trading group. With that in mind, I don't think I'm going to continue to tell you the exact levels that I'm in when I'm doing these videos, because far too many people look at the numbers, they don't understand what they're doing. They over-leverage, over-commit to trade positions, have very poor money management, and don't understand the market that they're trading in at all. So I'll continue with my videos, of course, but I'm rather going to give you a general perspective on the markets rather than my precise trade entries. If you'd like to be privy to those trade entry ideas, play by play and trade by trade, you're welcome to join my private members group, or you could join up on YouTube here as a member. There's a join button below this video, and from that, as a YouTube member, you'll get a lot more information than you get from these general public videos. Right, having said all that, and I am sorry if any of you have lost money trading natural gas, but this happens every time there's a dip in the market. People generally tend to go long. It's an emotional and volatile instrument to trade, and there is a reason why it's called the Widowmaker. Right, now we can get into the charts. First of all, let's go through the currencies. Basically, I'm looking for the dollar index to give us the direction on this, and if you look at the dollar index, I think we might just be rolling over. We've moved up to this Fibonacci level and just sort of faltering beneath this 100-period moving average and the 38% Fibonacci. If the dollar continues to move down, the dollar index, we should see a rally in euro and gold and perhaps even stocks as well. So looking across all these majors, of course, we're already short on the dollar yen. That's doing really well again today. And we're long on the euro and nothing on the pound. We'll look to build into this long euro position as this progresses, but that's beginning to move into some good profit right now. Going over to the yen crosses, there's the dollar yen, which we sold at 146, and that's moving down. And I expect the other yen crosses, the euro yen, pound yen, Aussie yen, Swiss yen, CAD yen, will all follow suit as and when this begins to move down. My target overall for this year and the beginning of next year on dollar yen is around 130 to 135, and I expect we'll see the other yen crosses move in sympathy with that. Going across to stocks, there are two really important things that you've got to remember. The market's completely divided whether this is going to be bullish or bearish going into this year and into the early part of next year. A lot of people are betting heavily on the short side at this level, and a lot of people are betting heavily on the long side at this level. We have a completely split market. What we did see yesterday, however, was that this rally in NASDAQ and S&P was not broad-based. In general, it didn't include the Magnificent Seven, and we saw some of the smaller cap stocks coming through, and the larger cap stocks and the Magnificent Seven, the tech stocks, the chip stocks, a lot of those tech stocks didn't actually rally yesterday, and some of them finished red. All of this taking place whilst the market's moving higher. So it seems like the steam has run out of the big tech stocks, and we're seeing a bit of a resurgence in the smaller cap stocks. But to me, this just means that the market's shifting out of rather tired and exhausted and overextended tech stocks into some of the other sectors and the smaller cap stocks. This could be a good sign for the market in the sense that we're broadening the base for a broad-based rally rather than just the Magnificent Seven. However, it could also be seen that the fire has gone out of the rally of the Magnificent Seven, and it's a precursor to a broader market collapse. As it stands now, we're short on NASDAQ and we're short on Apple. Apple, we picked up some profit yesterday, NASDAQ just edging higher. When it comes to metals, we're long on gold and long on URA. URA, I'm not going to talk about a lot here. It's just an instrument which I think is going to continue to edge higher gradually over time. It's more of a longer term play. Whereas gold, and I covered this in some detail in the previous video, I think has cleared a path for a further rally, and that this pullback will be met by further buying. We're trying small longs here at this 50% Fibonacci retracement level, but we are below the moving averages on the 4-hour chart now, and we do have further support lower down. The daily chart shows this pretty well. That's where we are at the moment at that 50% fib. There's a couple of moving averages below us, including the 200 period moving average at around about 1947. It's possible, potential and feasible that we could move down a little bit lower, down perhaps 1950 where the 200 period and the 100 period moving average is, and the 61.8% Fibonacci and a major swing low. Whether we have to test the swing low again or not, I don't know, but we're giving it a little chance to have a little rally here. Our target for gold is first of all back at this high at 2140 and then higher. Just looking at some of these commodities and futures, we have nothing on the 10-year yield, nothing on Bitcoin. We were short on Bitcoin actually until the day before this drop-off. Sadly, we missed out on that. We're long on VIX-Y, we're long on natural gas, nothing on WTI, nothing on Brent. We're short on London cocoa futures, just to point this out before we go back to natural gas. We sold right at the top, at this red line yesterday, and that moved down beautifully. We're looking for a move down to this low here at about 33.70 or 80, then down to the channel bottom where the 50-day moving average is, and then eventually down to about 3,000, this last swing low. And then natural gas, as I said in the video earlier, I'm not going to tell you my precise positions on natural gas in these videos any longer, for the reasons I pointed out. But we are long on natural gas, and now you can see we're trading within a channel. I'm just going to use this channel tool. It's actually a perfect channel on the 4-hour chart. And if I drag it down to the bottom, you can see we just about reached the channel bottom and the 2.3 level when we dipped down yesterday. We've rallied up quite sharply from there. Now we can see where our targets are. First of all, a movement up to the 20-period moving average and a gap close. That would be a first good start. Then we want to get up to the channel line, that's this green line that I just drew in, the 50-period moving average, then the 100, and then up into some of these resistance levels. My target for natural gas remains back at these highs at about $3.63. I want to switch to the day chart, and perhaps this illustrates it a little bit better. There you can see the channel I drew in on the 4-hour chart. There's yesterday's candle. Big spike low, a nice reversal candle. It's not confirmed yet. If we do dip down again, I'd like to see another candle of a similar shape. Or we might continue to rally up from where we are now, close this gap and break and close above that red line. That would actually validate this reversal candle and enable us to move up from the center line of this channel up to the top of the channel, 200-day moving average, then up to 2.8, then up to $3, and then up to $3.63. The green line barrier on this chart is the 78.6% Fibonacci. If you've been following me for some time, you'll know that's one of my favorite Fibonacci numbers. And if we do get a strong reversal off this level, particularly the 786, it's often a very good sign for a very powerful and strong trend to follow. So we're watching that very closely, but for now we're long on natural gas. So our positions on this chart are long natural gas, short London cocoa futures, that's well in the money already. We're long on gold, we're long on uranium, we're short on NASDAQ, short on Apple, that one's in profit, that one's negative. And we're looking to short all of these yen pairs, and we've started with the dollar yen. We're already short from 146. And we're long on the euro from much lower down. And that one's beginning to look pretty good as well. The euro, we're targeting this high here at 1.1, and we'll be looking for this to incrementally rise as time goes on, as and when the US dollar begins to decline again. Well, I hope you found that useful, and if you did, I'd really appreciate a thumbs up. And if you haven't subscribed to the channel, why not consider subscribing so you don't miss future videos. Take care and have a great trading week. I'll speak to you soon.